What's up, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and I give you some of my thoughts on the tickers up here on the left. So as always, we will cover our broad market, SPY the Qs, and IWM. After that, we'll talk about our core list of companies here. You can see lots of earnings coming up, so it's something to talk about, as well as our quickfire round tickers down below. So the Discord members did vote on a new set. If you want to vote for next week's video, feel free to join the Discord. It's completely free. Link down below in the description of the video with all of our other free resources. And before we go into the video, I do want to make you aware that Monday is a holiday and the markets will be closed for Martin Luther King Day. Jumping into our SPY weekly chart, talking about candlestick structure and location. As always, for structure, we have an inverted hammer, right? So we haven't seen one of these show up in quite some time, but now we have one, so let's talk about it. Obviously, this would indicate to us that there are some sellers stepping up inside this marketplace. The upper wick is telling us that. But if we look at the daily chart, and again, we'll do that in just a moment, it's not the most powerful inverted hammer in my estimation. Now, where are we in terms of location? And this is really important. If we think about last week's range, we can do it like this. The high and the low of the range, we know we had a crazy Monday on the first trading week of the year. But now, we're completely within that range. But another way you can look at this, of course, is marking sort of 50% of that range. And where did we trade? We're still above the 50% mark of the entire range of last week. So I'm not totally convinced that this is a complete breakdown in the marketplace, that we're going to be bearish for, the foreseeable future. Just because we have this inverted hammer here doesn't quite, we need to consider the context of the move, right? Another thing in terms of location, if we do something like this, 370 is our mark from this 4-week consolidation, and then when we broke out, that was like the breakout point, right? And we have not even come back down to test that. So in terms of location, in terms of structure, structure is saying bearish, right? We can't ignore the upper wick. But in terms of location, I'm not convinced that stronger sellers have really taken control yet. If we check in on volume quickly, you will notice that it's lower than our large breakout move from here when we saw that liquidation break and retrace 100% to all-time highs. So slightly lower volume. I'm not going to say that it's completely low. We obviously have these days in here to compare it to as well, but it's just something to keep in mind. We'll go to the daily for levels. So on the daily time frame, things get a little more interesting because now we can see that this breakdown, what happened on Friday, is really the main cause of that inverted hammer. If we look at the rest of the week, all of the value was just going sideways up at the top of what was a 6-day balance area. So how do we play this going forward? Well, first of all, this is a hammer candle. Has a lower wick indicating that buyers did step up at this specific point right here. Now, I won't ignore the fact that in the post market, it did see a little bit of sell side activity as well. Again, not trying to ignore that, but based on what happened in the day time frame where the majority of volume traded, it looks like short-term traders are in control because they bought a very specific point. Now, I'll show you that specific point right now if I do something like this and put a 20 SMA on the chart. Okay, a longer-term seller, someone who's just selling because they believe the market's rolling over much lower, they're not going to care about a 20 SMA on the daily time frame. This means short-term traders are in control, and once again, based on this lower wick, maybe we do make a move back into this sort of 6-day consolidation that we were in. That would be a look below and fail, in which case we always target the top end of the range, aka all-time highs in this instance at 381.21. Now, if this is truly a look below and go, meaning that we are truly breaking down below this 6-day balance, we have to at least consider all of the trapped people who are long up here who will then need to sell their positions to get out when we truly realize that this is a larger move down. And again, this is just a scenario for you to watch out for. I'm not calling for a complete rollover of the market, but if we do start to take out some of these areas of support in here, right? We talked about this being a critical area of support on that weekly time frame where we really broke out from. If we take that out, then of course you have to be prepared for the rollover to the bottom end of the 4-week balance, which preceded that, sort of around that 364.22 area. Again, you have the scenarios laid out. I personally think that short-term traders, not sellers or buyers, just traders in general, are still in control. And ultimately, the trade on Tuesday will really be telling on whether or not we pop back into this range, in which case target's up here, or we start to crumble a little bit. We have areas mapped out below. So here's something quite interesting to me. On the Qs, we would generally expect the two indexes to sort of move in sync, but what we're seeing here is we haven't really even come back up and tested that all-time high during this what was a 4-day consolidation period, right? So a little bit more bearish here in the Qs, but that's completely understandable given the fact that they've been on such an impressive run. Maybe it's time to let the foot off the gas a little bit, let them cool off. One thing I want to make your attention to, though, is that our support trend line is still intact if we draw in something like this, right? If we come from these lows, connect these, we're still trading well above the support trend line. So that being said, there's still room for and the scenario for a move completely to the support trend line and then bounce out of it for a new set of higher lows, right? The uptrend has not been violated yet. I guess the main takeaway here is that although Friday was some sell side activity, just know that we're still in an uptrend. Don't start to panic out of your longs essentially until we start to break this area of support on the chart. Now, if we do go lower, where could we be headed? Well, we have this area of support at 308.30. Underneath that, remember that the market remembers more recent areas as opposed to prior areas. So the liquidation break low from 2 Mondays ago at 305.15 about will be fresh in the mind of the market. So keep that area on your chart. And then there is a strong double bottom here at 304, about $1 lower. So I would just call this a zone, right? 50 SMA will be there as well. So strong support here, probably a first touch buy in my estimation. If it cracks though and the S&Ps do continue lower, next up is going to be 300 psychological. If we do get the rebound, obviously we have resistance at 315.15 and then all-time high after that. I would even venture to say that here will offer a stubborn area on the chart that you should be aware of. That's going to be right around your 317 quarter. And last but not least, the beast, we have IWM Russell 2000 and our small caps. And once again, just a completely different picture. You can see that we actually set a new all-time high. We'll mark that in. And now we just have a complete doji candle, right? We closed almost exactly where we opened. We went right to the gap fill area that we talked about in the midweek market update. So congrats if you caught that as a target. And then we bounced. So I'm sort of thinking that we go sideways here, right? The sell side activity was not nearly as aggressive. There's actually a larger upper wick here, indicating that there was some buying pressure at one point. So I'm sort of neutral here. There's no clear direction based on the candle. I think we might see some chop action in this range. Obviously, play a breakout over that all-time high, the 215 mark, if we get it. Or if we flush the lows in here, that prior gap fill area we talked about, around 208.50 down to 208.15 just about, there is a next shelf up as support here at 204.64. And I would just, again, where are we in terms of our support trend line? It's probably too steep to even draw in at this point on IWM. If we were to draw one in, it might look something like this, coming from this low to that, prominent low there, still well above the support trend line. So there is room to pull back, right, and still maintain an uptrend. So just because we saw a little bit of sell side activity, once again, the main takeaway here is that we are still in uptrends across the 3 indexes, just seeing a little bit of a pullback. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into our companies, this is going to be a blanket statement for everything with earnings coming up. You'll notice Apple does have it around the corner, but the main point here, and if you go back and watch any video I've ever posted, I'm always an advocate for not holding and gambling any options through an earnings announcement. It's a 50-50 event, right? Meaning it could go either way, as well as you have theta and implied volatility working against you as the announcement sort of comes out and all the volatility gets sucked out of your options contract. So once again, I'm not an advocate for swinging through them. If you're going to do it, be okay with 100% max risk on the contracts. You could lose it all if, the stock gaps completely against you and everything, goes against your original plan. So there's the disclaimer. As we come into earnings season, I'll probably repeat it on a few more stocks, but for now, we have the blanket statement. In terms of Apple, we are stuck in, just like SPY, a consolidation balance area. How do we treat these? Well, we have a flush point here now at our 126.65. If it breaks, we typically look for a doubling of this range right here. Now, what would that look like? It probably puts price down here around the 123 mark, okay? But there is a critical area of support before we get there. And if I do something like this and draw in a support trend line, hopefully you can see what I'm talking about. We have 50 SMA, support trend line, as well as horizontal support here at 124.50. Definitely a critical area of support on the chart. Probably acts as a first touch intraday bounce there, so take it for a day trade if you want. Anything underneath, sure, target that true double of the range down to 123. Anything underneath, we have our 121.07, and if earnings completely makes this thing go down, 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 we're looking at 112.50 as next support, as noted by those touches down there, and even if we scroll back, some prior support in this area of the chart as well. To the upside, say earnings is a positive catalyst. We can't ignore that either. With it being a 50-50 event, we would need to clear this area of resistance. It is the top end of the balance. It's a pressure cooker top now at 131.17. If we clear it, probably a small bump in the road here, at least intraday, if I grab the right tool. And speaking of tools, I did a whole tutorial on thinkorswim tools. I'll link it in the cards up above, top right for you right now. But again, if we can clear this area here at 132.57, then it's the move into the all-time high around 138. So with earnings coming up, I'm going to give you a lot of scenarios, but you have the levels to trade off of. Again, I would really pay attention to this area of support here at 124.50. Moving over to Netflix, and I will remind you that earnings here are going to be on Tuesday after the market closes, so that is the first trading day of the week, remembering that Monday is a holiday. What we want to do here is treat it, again, probably don't want to trade it through earnings. If you day trade it coming in, probably want to be flat at the end of the day there on Tuesday. Inverted hammer here at the 50 SMA would lead me to believe that sellers do want to take it lower, right? We're just really failing to find any new buyers. I think that's the issue here. It's not that sellers want to take it lower. It's just that the buyers aren't here to move it higher. That being said, if we break this area of support, it's such a critical flush point based on all of these touches on the level. 495-ish, if that gives, we're flushing down to the 200 SMA and probably the 477.62 area. Again, if earnings really sends it on a downward spiral, we have 467 after that, and anything below, I think anything below makes for a nasty move in Netflix all the way down to around the 430 mark. So again, if earnings is completely gross and sends it down there, you have the levels, but I would really be looking at this first and then here, if anything. To the upside, say earnings is positive. Once again, we can't ignore that. We need to break over these sets of highs at 513. You can see it was prior support, now turned resistance. If we break it, look for a move into the 537 quarter. Anything above, I would probably leave it off here at 557.01. So Tesla, I still think that this is going to be a stock for day trading only. The only thing that's sort of boding well for any sort of swing trade is the fact that we're consolidating up here at the highs instead of just seeing a nasty pullback. Now, that could all change early on in the week, so you really need to wait for a key break of the 860 mark before taking any swings long, and then set your stop loss accordingly. Targets above will be the all-time high, of course, at the 880, let's just call it 884.50, and then anything above, actually on a stock this expensive, we're looking at $5 marks, $10 marks, $25 marks, $50 marks, and hundreds, and psychological numbers as well. Do I think that they're going to push it all the way to 1,000, 950? I have no idea, and I'd really be leading you astray if I said yes, it's going to 1,000, yes, it's going to 950. So again, just play it as it sort of starts to unfold. Probably still a day trading stock for now. Again, until we clear that 860. I like the fact that it's consolidating at the highs, right? We have a daily bull flag, but if this area of support in here starts to break around the 822, probably Friday's low around 820, 819, if that starts to break, our next, we've talked about this in past videos, poor structure below us probably moves us down into the 750, and then in here, this was kind of the breakout area between these highs here and these highs in here around the 684 down to 653. Baba, again, being impacted by the news, might want to be careful with any swings. We've talked about that for a while now. Earnings are further out on this one, so you're all good there. In terms of our gaps, we're starting to fill the gap above, and if we move into the 250, 278, I would expect that to act as sort of at least an intraday gap fill reversal. We have the 50 SMA coming down, the 200 SMA is moving up, and it may be at that level by the time we get there. But most importantly, if anyone was long from in here on these three touches of 250, 278, and for who knows what reason, they held all the way to down here, and they want to get break even, they're probably going to turn into sellers up around these areas, right? So watch out for a gap fill reversal kind of in there from a psychological standpoint. If we cruise up through it, probably a move to the bottom of our next gap, right? We have a gap here as well as a larger gap up here. That's a pretty hopeful case here on Alibaba, but what we do know that it can move, right? Large red day there, a couple of large green days in there as well. So it does have the potential for some nice range. Just be prepared with those targets. To the downside, if we move back underneath this triple top here at 238 quarter, probably the most bearish scenario for Alibaba is moving back down into this flush point at 225. Anything underneath flushes, right? Big amount of touches in there. Flushes down to the lows at 212.07. And I will just make you aware, there's a tiny little gap in here underneath Thursday's low down to Wednesday's high. I'm not going to point it out, but there is one there. Facebook, I know there's a lot of lines on this chart, but we're going to clean it up just a little bit. We're going to get rid of this one because you can see we just moved right through it. But we have talked about for quite some time now that because we were in this larger consolidation pattern, we were expecting a larger break to either the up or downside. And now that we've got it to the downside, earnings are right around the corner, which is going to do, like we said, 50-50. It's either going to keep sending Facebook lower, in which case we're probably going to target the gap fill down around the 235 mark, or if it hooks it back higher, need to see the break of 255.05 to get a move back into the bottom end of this prior area of support, which will now act as resistance at 265.17. The saving grace for Facebook right now is that this was critical support here, and we have the 200 SMA tangling up as well. So could we see a dead cat bounce? Absolutely. Anything above that, right, is going to be a move into the 50 SMA probably as it comes down into the 272 mark. So NVIDIA is really just stuck in a long-term consolidation. We've had a number of fake breaks both up and down, especially with the news catalyst early on in the week. I'm sure a lot of people got trapped going long up here over that breakout point. I mean, it really was a great setup, but it just didn't materialize. So now that we're at the bottom end of our consolidation range, we have to consider the fact that we could flush once again into critical support, as noted by this liquidation break at 504.75. But more importantly, remember the doubling of the range, right? So this is a rather large range. It's not like we're going to go here and stop if it truly is a breakdown. We probably want to go lower into that 492 mark, and anything underneath is going to be around 481.71. Earnings on this one are a little bit further out, but once again, you would have thought with the catalyst there would have been more buyers in this market, but there just weren't. So the sellers can easily take control in that instance and push it lower. That's why I want you to have those lower targets. If for some reason we do break back to the upside, we play a little more ping pong in here and then do something like that, we're obviously going to have to contend with now this high in here, which is around 558.62. Sort of ruins the ideal situation where we would have sliced up through this area of the chart where there was little resistance, with ease. But if we do, next target at 573.52, based on these extreme red candles, I think maybe we see a day of pause right above this key area of support, and then a flush if it turns into a bear flag. Microsoft is, again, earnings coming up right around the corner, but at a critical flush point. If we break down the low of this sort of interesting day, we talked about that inverted hammer there on the weekly midweek update. If we break down the 212 flush point, right, probably into the next area of support here at 208.73, looks likely, again, based on the fact that we're still forming lower highs here, and now we have equal lows, makes sense that we would now form a lower low into an area of support. If that breaks, keep in mind, 200 SMA, the green line there, is in between ranges, where our next support would be around 200, the whole dollar. Remember, earnings could do anything, so we'll give you some upside targets as well. Strong resistance here at the 216.40, where the 50 SMA is. If it breaks, looking for a move to 220.85, and anything above that is kind of these highs in here. I'm not going to say the exact high because you can see rejected a little early, 2 days of rejection a little early, and then it was kind of choppy around here, but that's at 225. I would just call it the whole dollar. And wrapping up our companies with Amazon, it's a very similar picture to what we just looked at on Microsoft, right? We have lower highs coming into a now key area of support, almost a flush point there at 30.78. We talked about in last week's episode the huge failure of the breakout of the symmetrical triangle, and now we're testing the lows once again. If we go lower, we're looking at 3,000 psychological. Earnings on this one are still a question mark, but for now slated to be towards the end of January on the 28th there. 200 SMA is below that 3,000 mark, so by the time earnings comes out, maybe it does something like that and it meets us there. I would just be, on watch for that. Again, probably don't swing any options through earnings. If we get a bounce here, have to battle back up through the 31.31 mark. You can see it offered resistance resistance on Friday, even with that small upper wick there. But if we can, probably a move into the 3,200, and then anything after that is going to be here at 3,250, and then here at the 3,344. Jumping into our quick fire round, what's really concerning here on PLTR is the fact that we have two fake breakouts over our resistance trend line. So each time the buyers tried to get something going, the sellers stepped in and said no way. So I wouldn't really be interested in taking this on another break of that trend line. The real break now needs to be over that 29.35 to get bullish into target 1 here at 31.25, and then 33.50 all-time high. Monitor for continuation over that. But again, with these inverted hammers, with the fake breaks, not really interested until we can at least trade up into here, consolidate, and then maybe get a break like that. For now, these inverted hammers would lead me to believe we go lower. So first target would be here at the 23 mark. Anything underneath, double bottom from in here at 21.15, and then we'll walk it down to 18 as last target below. So NEO obviously saw the breakout here on the NEO Day news and all that good stuff that was happening, but we're starting to pull back now. So I would advise you, if you haven't been long NEO, this might be a buyable opportunity. I would give you the at least idea that we have in terms of Fibonacci retracements. We're sitting right at the 38.2. Now, just because we're there doesn't mean it's a buy, but it does mean that the pullback here is at least sort of healthy. That being said, we have repaired some structure, which is a good thing. We repaired this gap below, and now there is just a little bit more of this gap to be filled if we can break down Friday's low and truly come into the breakout area here at 54.16. Ideally, the scenario would be this: form a higher set of lows in here, and then hook back to retest the all-time high, right? We would have a set of lows, and then this would be our higher lows. So that would maintain the uptrend that we're in and keep NEO bullishly poised. So leaving Intel a little bit zoomed out so you can see the choppy nature of what's going on here. Huge gap down on this earnings cycle here, another gap down from this earnings cycle here, and now we actually have a gap up, so there's a gap below us. Beneath the 56.87 fills down to 53.85 just about. So extremely choppy in terms of how this one responds to news as well as earnings cycles. So this gap technically has filled to the upside as soon as we tag that level there at the 60 mark just about. But now, again, coming into earnings, we have a large gap and poor structure below us. So I would be, a liar if I told you I knew which way this was going to go. In my estimation, ignoring earnings for now, I would say that, it would want to go sideways and digest this gap a little bit. But because of earnings, we could go in either direction. We could either move up higher, in which case target will be here, 61.83, then 64.20, or if earnings is a flop, which it has been in the past two cycles, right, these large gap downs, maybe we take back 100% of this gap up and come into the 53.85. So again, earnings right around the corner. I just would not be a player here for any sort of swing trades. You have some levels mapped out if you want to day trade it. So AMD did see some more serious sell-side activity later on in the week, but what's interesting here is the fact that we are coming into kind of a prior area of support, right? At that 87.36, we had resistance, which now should act as support. And because of the nature of the selling here, I wouldn't go to say that it's oversold, but maybe if we start to see, the sellers take a breather at least, we might get a dead cat bounce into this area of the chart. If I grab the right tool, that would help. And remember, there is now a tool tutorial on the channel. Check it out. But this is the dead cat bounce area. So the scenario here on AMD is if this truly is the sellers needing to take a break, buyers will probably take it to retest 89.50. That will be your key. If we can clear 89.50, then stronger buyers are probably here and take it to 94.20. If they cannot clear the 89.44, then it's just a dead cat bounce. You're looking for a retest of 87 and a flush of that level to probably move lower into the 82.25. NNDM, I'm leaving this one zoomed out on purpose just to show you the nature of the stock. If you've seen charts that look like this before, you probably know where I'm headed with that. I'm not bearish on them. I just personally don't like to trade them. We can obviously see here that we are stair-stepping in the right direction, right? We're doing things like this, and now we're on a new leg up. So key areas to keep in mind and reference will be here at 975 just about. Prior breakout level probably wants to hold on any pullback and then see a new higher set of lows, just like what we talked about in in Neo, I believe it was. If we take out the all-time high, technically treat it like blue sky territories, 25-cent marks, 50-cent marks, as well as any whole dollar marks. Anything underneath that, if it fails at 9 3/4, then we're probably looking at 830 as support. Anything underneath that, we'll just walk it down here to 608. But again, remember, we're in a strong uptrend. We probably want to see a higher set of lows form and then continue on above that all-time high. So BYND is more my style. This actually looks fantastic for a breakout over this area of resistance, right? We've talked about this in prior videos. If we can clear above that 145.11, I think there's a strong case that we at least move into the 158, if not potentially higher. We have to consider that this red candle here, all of that selling, and even this selling in here on the way down there was fairly emotional, right? There's not a whole lot of market structure there. It was almost straight down. So that being said, it will be fairly easy for the buyers to just, not easy, I shouldn't say it like that, but there will be very little resistance in that area of the chart until we come into the 172.20. So this looks good. Why? Because we see a consolidation candle forming in the upper 50% of this range here from Thursday. I think if we see some more sideways action, let some more accumulation happen, boom, get the breakout and move higher. The key support below is at 135, as noted by the level, first of all, and also the 50 SMA and 200 SMA coinciding perfectly. So ZM tagged its 50 SMA and then filled the gap below. Right now, you're going to have to wait and see if we get a gap fill reversal off of this sort of area of the chart, just, probably right around our 380 mark. If we do, great. If we can clear the 50 SMA, probably moves back up into our 420. Anything above, we have 443. To the downside, if we do not see the gap fill reversal off of these levels from Friday, look for a flush underneath our 379, we'll call it, down and to test these lows and potentially fill the gap all the way down to 325 from what we saw in here. Visa is a cool one. We've been talking about this in the Discord for a number of reasons. I'm interested for the long-term accounts, but we are filling this gap, right, from in here. So that gap has been filled, and we're coming into a prior breakout area from in here, which should offer some form of support. If we do see some more reversal candles form, we see a bottoming pattern form here, looking to take it long, and target first here 204.70. That would be a very, very conservative target. Anything above, though, your real target's probably up around 213.12. To the downside, if it does not hang on to $200 in the support mark, probably just look for that 200 SMA to offer support around 196. And, that's kind of, I would argue it's kind of coinciding with that level there. Might just be cherry picking it. So be careful and probably just avoid along and wait and be patient if it does break that area. Looks like I lost the connection to the mouse. Bear with me. And we're back in business. So what I was saying on V, again, I think we covered it. Pen. Let's talk about what's going on here. If we zoom in a little bit, here we're again bull flagging and holding our prior area of resistance as support for now. So don't let anyone tell you that Pen's crashing. Unless we fail this 98.50 mark, then yes, it could get you a little bit more bearish, probably into this area of prior resistance, which should act as support. This new mouse is not letting me click a new area of resistance. There we go. So that's going to be there around 94.50. Anything underneath probably comes down into 86 or 87 the whole dollar before the 80.13. And finally, we have GIK, which I believe is another holding company. So again, treat this one. It's going to be very volatile. I mean, look at the chart so far. You can probably see that. For now, I would want to see it hang on to this area of support at 15. It was prior breakout area. This mouse is really giving me some issues. Apologize for that. And then to see a breakout higher, you probably want to be over 17, right, with some true strength. Anything underneath, I'd probably watch out for this support trend line, honestly. Something that looks like this, fairly steep, but very well intact to act as support if 15, if we get into that area, super support. Anything underneath probably comes down into here. I would argue it's here. Right, we had two areas of support, even some prior areas of resistance, acted as resistance once, twice, support once, and sort of in the zone effect there at 1350. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. Remember, with earnings coming up, to be careful with any options positions. The market is closed on Monday, and with that, I wish you all a green trading week.